Hello everyone, welcome to our short session today. Today our topic is how to reduce tax from 47% to 0%. All right, let's have a look at the strategies. Before we go to the main content of the details, a quick declaration. The information provided is for general guidance only and should not be considered as personalized tax advice. We recommend consulting a qualified tax advisor or planner before implementing any tax planning strategies. Please note that we're not licensed financial planners and do not provide financial product advice. For tailored investment guidance, consult a licensed financial planner. All right, let's have a look at the strategies. Okay, the first one, income structuring strategies. Use discretionary trust to distribute income to lower tax beneficiaries, or also set up a bucket company to cap tax at 30% and retain profit for future distribution. This one is kind of common, but it's very complicated in the background. Yeah, so basically, potentially from the top level, if you're allowed to divert income to a family trust, you can actually set up a family trust, especially for investment. And then to have a bucket company underneath. Bucket company is basically a corporate beneficiary. Okay, it's a beneficiary that's a company. And then you can cap tax at 30%. Of course, at 30%, if you know about the franking credit system, you can also potentially get a refund or tax offset in the future years. Okay, and then you can, within the bucket company, you can retain the profit for later on. All right, so that's a potential structure. Structure is very important. Yeah, almost most important. Yeah. All right. Okay, the next one. Investment and capital gain strategies. So apply negative gearing on property shares to offset income. Use 50% CGT discount on asset held above 12 months and offset gains with capital losses or capital works deductions. Okay, so this one, negative gearing, I think a lot of people understand the concept. Basically, you create a tax loss using a rental property or potential if you have some shares to a rental property. And then, but underneath, there's a lot to it. Yeah, like non-cash deduction, such as depreciation, and then how to utilize it to create a tax loss, even if you have a positive cash flow. All right. And then use 50% discount on assets held above 12 months. That's actually quite important. In the past, we did have clients who made a mistake. They sold some assets just a few days before the 12 months expire. So, and then they had to pay the full capital gains tax on the marginal tax rate, which was a shame. Okay, so remember 50% for assets held above 12 months. And then offset gains with the capital losses or capital works deductions. So when you're running a family trust, you know, the what we mentioned earlier, you can potentially use the streaming functions for a family trust and pick and choose a family member or beneficiary that actually got carried forward capital losses before from prior years, okay, to offset or reduce capital gain first. All right, number 3, superannuation contributions. So if you can contribute up to 30K per year, okay, try to do that if it doesn't impact on your short-term financial goals. Okay, that's the current tax current threshold or cap for the concessional super contribution. And then you can potentially use carry forward unused concessional cap as well. Yeah, up to 5 years. And then potentially use transition to retirement rules to draw tax-free pension. So once you reach preservation age, currently it's at 60, you can actually start transition to retirement. And then from that moment on, you can potentially draw out tax-free pension from your super fund, right? Okay. business structuring and income splitting. You can trade if you have active trading activities. Okay, you can trade for a company or trust instead of individual name as a sole trader, because as a sole trader you have to pay top marginal tax rate, and then you can distribute income via dividends or director fees. Okay, and potentially employ family members to shift income. Of course, within that, when you have a salaried employee, including yourself as a director, you can potentially utilize FBT exempt benefits. Yeah, we have mentioned in many other YouTube sessions. Yeah, you can rewatch those sessions on FBT related exempt benefits. Okay, for salaried employee, including directors and family members. All right. Number 5, strategic deductions and prepayments. Okay, you can potentially prepay up to 12 months and claim the deduction in the current tax year. Okay, if you do this before the end of the tax year, June 30, you can actually claim the deduction for that financial year. Claim income protection insurance and work-related education. Income protection has to be outside super fund for you to be able to claim a deduction. Yeah, make sure that it's purchased outside your super fund. Deduct travel and subscriptions if business related. Yeah, this one's of course quite common sometimes. So subscriptions or other business related expenses, that could be a very long list. So everything we mentioned, if we drill in further, every single topic we mentioned, we could extend for half an hour. Yeah, so make sure you talk to us and or watch other YouTube sessions. Okay, there's a long list of every single business structure to maximize your deductions. All right. Finally, we want to just outline a very quick and easy example. Okay. Let's say someone paying 47%, and then who actually got particularly the trust distribution could be, let's say if you have 100K income in a business as investment income, you can potentially distribute to family members to reduce your tax rate. Okay, so let's say if you can choose family members who don't have other income, and then 100K can be distributed to them and reduce your tax to 0. Okay, and so 100K distributed to family members reduce your tax rate to 0. Super contributions to claim a deduction, 50K. Negative gearing will bring you 40K tax loss. Okay, and then DGR donations. DGR stands for deductible gift recipient donations. Okay, 20K. So you can claim deduction for it as well. Prepaid expenses, that's paying for next financial year. Okay, 15K. And then the total tax deduction is actually 225K. All right, so someone earning about, let's say, 245K was left over on 20K. We all know that the tax rate threshold at the moment is $18,200 plus the $700 low income earner tax offset. Someone earning 20K would be tax free. So someone earning 245K, okay, minus all the deductions will be tax free, so 0% tax. All right, of course, this is only a very quick high level example. Yeah, for all the topics we mentioned in today's session, every single area, if you drill in, there's a long list of smaller strategies underneath. Yeah, so make sure you talk to us to save every dollar of your tax. Okay, all right, and a very quick introduction about myself. Also our contact details here. If you have any questions or want to book a consultation with us, talk to us, and we're looking forward to talking to you to see how much tax we can help you to save. All right, thank you. Thank you for your time for joining us in this session, and we'll see you in the next one.